Welcome to the Predictive Playbook, everyone. I'm glad that you took the time to watch our show. We really appreciate it. And if you like our stuff, please take the time to give us a like, a follow, a subscribe, or whatever platform you're watching it on. If you're listening to Apple Podcasts and you don't see the visuals, just direct message Steve or myself. We'll send you the charts that you would have seen. But at least you'll be able to imagine them in your mind, as George Carlin once said. So welcome to the show, Steve. How's everything going this week?
Doing well. It's definitely been interesting moves in the markets, and we'll get to those in a little bit. We've definitely nailed Bitcoin several times now, and you talked about how it stalled out. It would stall out in the high 40s, and that's exactly what it's done now for about a week or two. So we'll see which way we think it's going.
Yeah, for sure. And I have a chart over here that I'm looking at. So when I'm looking this way, that's what I'm doing. And I'm just gonna pull that bad boy up. Yeah, so it's on a 1 hour chart today. It's had a pretty big spike up here, but that is so common that it never really gives you any decent intelligence for a trade. But on a daily bar here, we have a couple about 6 or 7 days since we peaked above 50,000, and that I would like to think that's pretty constructive going forward. I'm just not convinced, Steve, that this is the time to get in. As we've talked about, with your trend following stuff and my candlesticks and the price pattern recognition models, that it really you want to play the market basically the same way we play the sports markets. When regardless of the price, you're getting an opportunity that the market is ready to go in that direction that you're betting on. Such as futures bets, and I guess the NFL would be a good analogy, because that covers over the course of 18 weeks in the NFL. That is more long term than playing one game. One game is almost like a kind of like a day trade, especially with in-game betting now. That is definitely what that is. But it seems to be trading okay. It's not collapsing. Dow futures continue to defy gravity. They only know one direction, and that's up. And that's the higher this thing goes. And I know you're with me, Steve. The bigger the correction is going to be, and Piper's going to get paid one of these days. And it may not be for another 12 months, for all we know. But at some point, these valuations got to be adjusted.
Yeah, and one thing to keep in mind too.
So that's kind of my take so far on that.
Yeah, and I think the Dow and obviously the S&P, it just keeps rising and rising. And I saw a stat yesterday that it was the most intraday all-time highs in the month of August since 1987 of August and 1929 of August. So two of the worst corrections ever in October followed in those 2 years, of course, the Great Depression and the 25% Black Monday in 87. So, I mean, I don't know, what the catalyst is going to be, but something is going to trigger it here in the near future. As far as Bitcoin, something that's also interesting to track is that Ethereum has been outperforming Bitcoin the last few months percentage-wise. They both have been pretty much the same uptrend long-term, but like if you look at, again, Ethereum today is up like almost 9%. Bitcoin's only up 2.5%. So it looks like there's been a little bit of movement over to Ethereum, and that might be another reason Bitcoin is kind of stalling out. And another reason, I don't know in the immediate future we're going to see a big breakout from Bitcoin. It looks like this, 50,000, as we said it would be, is the support, is the new resistance. I mean, it's hit it for about 2 weeks straight every single day, and it hasn't broken through. And you had that sideways volume chart, over the last few months, and there was that huge little gap in the mid 40s where there hadn't been a lot of buying or selling because it dropped through it so fast. I thought that was a cool technical. That's actually a technical indicator I had not used before, and I really like the concept of it, and would love to see that again. Maybe you can post in the show notes or something, because sure. I have a feeling it's really filled in over the past few weeks, and we're kind of probably in a smooth, steady situation now.
Yeah, that's you're referencing the Stoudemire profile.
Nice.
Another technical term for Tony Finn later today on the Manny.
That one I would not have known. I did not know that one, John, until you busted it out. I like that. Basically a sideways volume chart.
Yeah, and it takes in consideration the number of trades. So it's very much like money flow in sports betting. You have number of tickets, and you have the amount of money bet on those tickets and the percentage of the total. The stock market profile is pretty much the same, but you have a greater change in price than you do in the sports betting market. So to do a profile like that you could, college football lines can move 6-7 points. And I'm talking off the top of my head, but maybe we ought to take one of those games and I can do a visual showing the different volume at different levels of the game. That would actually be pretty neat to do. And
Yeah, I
I
think
have all the data, so
Yeah, I mean the problem I guess would be that it's maybe like an NFL game. We know we have several days of wagering, it might work. But the problem with most sports events, especially baseball and basketball, is that it's a short window. The wagers all come in within a few hour window for the most part. I'm just not sure there'd be enough time for it to smooth out. Because with Bitcoin, that's what happened. It dropped so fast back in May, from 60 down to 30, that it just never really hovered in that mid 40 range, and now it's done it for like 2 weeks straight. So, I mean, the question, of course, now is which way to go. I definitely would not be adding on right now. Now, if it breaks out, if it has a couple days closing 51, 52 or higher, I think that could be up to 100,000 then. That, once again, I would sacrifice a couple thousand here. Just like we said, this exact same setup as it was at 29.30. That was the support for months. It broke down to like 29 for one day. And then over that weekend, it gapped up to 32, 37 within a day or so. Yes, you lost a little bit there, but it's up to 48, 49 now. So even if you'd gotten in at 33, 35, 37, you still made money. I would take the same approach now. I would not be adding to my position until I see it hold steady at 51, 52 for a couple days on closes. That means this ceiling becomes the new floor, and then it could be off to the races. But it is interesting to see Ethereum is getting the love now, the better percentage gains. Bitcoin's kind of like the slow and steady stock now, and some people, a lot of these crypto investors, they're ultimate day traders on steroids. So they're gonna. I think also that's something we're going to see over the next couple of years is that Bitcoin's not going to be as parabolic maybe as Ethereum or even the newer ones like Dogecoin and stuff, because these day traders aren't going to be able to get the 1,000% increase anymore with Bitcoin like they can with some other ones. Might be a good thing for Bitcoin. It might make it more stable, which is a problem I have with it as far as using it. So we'll see what happens, but I still think the trend is probably up long term.
yeah, I think so too. Same thing with the S&P 500. If you're long, your IRAs, whatever you guys all have in the chat room there, the trend's your friend. I hate saying it, but it's starting to get frothy in terms of how high this thing's going to go. But as you and I talk, Steve, it's the reverse of the "don't catch a falling knife" slogan, and you don't want to stand in the way of a freight train that's going straight up, no matter what the fundamentals say. And that's exactly what this thing is doing. It's a linear movement. It does sell off briefly, but then it's quickly absorbed, and that's because our fiscal responsibility is kind of out the window right now. But I understand that people, definitely needed to have the funding when they got it. But that at some point has to be paid back, and who knows when that point is going to be?
Yeah, and I mean, if you look at like the trend line is really held steady. I mean, right now it's at about 4,500, 44.5, 4,500. The S&P is up at about 45.36. So it's only a little bit above the trend line. So, I mean, you could have a very sophisticated stop loss or start hedging out if it gets below that trend line. Now, the problem, of course, as we know, is we see some of these 3-4% drops in one day, and we've seen it 2 or 3 times over the last couple of months, and it's gone to all-time highs a couple of days after that. So it has kept. That's why I wouldn't sell all at once. I would definitely not be adding. I'm not saying go out there and sell now, but I'd have a very tight stop for maybe your first 25 or 50% out, and that would probably be around that 44.5, 4,400 mark in the S&P. It's currently at 45.36. So I think that's a good way to hedge out, and that way if it does drop 20, 30, 40%, you've gotten a little bit out ahead of time. I definitely would not be adding new money. I've said that, but I also have not been saying. I'm long. My trend following is long every equity market, and it's been for the most part 90% of the time for the last 9 months, and I don't like it, and it's made a lot of money. That's why I like being a trend follower. I will like it more when I can finally get short. I've been short for like a 1 or 2 day span a couple of times, and it quickly reverses, and I'm back long again. A little 1% loss for me. So we'll see what happens. But it just drives me crazy, like the buy and hold mentality. Like, you can't time the market. You can time the market. I mean, that's what you and I have done for decades. That's what we're talking about on the show. That's what we did with Bitcoin. I mean, it's the same thing with leverage. Everyone's like, leverage is dangerous. No, it's not. Leverage is fantastic if you use it correctly. So people just don't look at things the right way. If you're a buy and hold person, that's fine. I wouldn't sell right now, but I would definitely have an exit strategy, because why would you possibly want to give back 50% of your profits, which is probably going to happen here at some point in the next couple of years?
Yeah, I mean, you got to be prepared. It's just like doing in-game betting that we talk about a lot. You know, I always say you got to know the levels where you want to place the in-game bets. You can't, like, get into it and then decide, like, oh, gee, I bet the Eagles, they're getting killed, so I'm going to bet the other team now to make up for the bad bet. Well, you'll end up losing both. But you definitely have to have a plan for both of these markets. One thing I wanted to do, Steve, with our remaining time is the connection with the PGA Tour. I think is really a good one this week, with the connection to the option markets, really. So what I'm going to do here is I took implied volatility. It's a calculation used for option evaluation, and applied it to the NBA for totals, and it worked. Of course, it doesn't work all the time, but you take advantage of the violent swings. And in basketball, we know there's runs. And for example, when a team that is an opponent of a bet that you like goes on a 10 or more unanswered point run, that's a sign that you can get on your team, and you're going to get it at a cheaper price than pre-flop, or in other words, before the game started. So this week, we have the final tour event of the season, and it's the Tour Championship, FedEx Cup. Winner gets $20 million, and that's in U.S. denomination too, by the way. But Patrick Cantlay and Bryson DeChambeau last week at the BMW put on one of the greatest shows I have ever seen in professional golf, and had David Behrman on earlier today from ESPN, and he agreed, and I think the whole world that saw that agrees, because it was one haymaker after another. And much like handicapping and much like trading, there's so many different ways to be successful in the financial markets and also sports betting. And we saw two players, Bryson, a bomber, and Patrick Cantlay was at least 40 to 70 yards behind him off the tee. So he's not a big hitter. You know, if you played with Patrick, you'd be impressed at how far he can hit it, especially if you've never seen Bryson live hit a golf ball. But it was contrasting styles with bomber versus finesse. Patrick Cantlay set the tour record, all-time tour record for shots gained putting at 14.5, and that's insane. I think there's only a handful of players that have ever gone double digits in a 4-round event. So now we have the final event, but it's different this time because Patrick Cantlay, who's number one in the points, starts at minus 10 or 10 under par before he even hits a shot. Tony Finau is next in the points standing. He'll be minus 8, Bryson minus 7, and they go through the 30-player field that remains until everybody's assigned a number under par. So Patrick Reed was the last guy in. He's starting even, along with Sergio Garcia, Billy Horschel, and a couple other guys. So for them to make up a 10-shot lead is not likely. I think the most that has ever been overcome is 5 shots. So, it even took Tiger Woods at this course, Steve, since 1998, when they started this Tour Championship. The FedEx company became the sponsor in 2007. But between 98 and 2007, it took Tiger 4 times to win this thing when he had the lead after 3 rounds or was tied for the lead. And that's so un-Tiger-like. So the course is it can really bite you, and it has done damage to, arguably one of the best golfers in the history of the game. So what I did was, I thought that, what I need? I need to identify the players that have the greatest playmaking volatility. So when a guy gets hot, does he stay hot for all 4 rounds? Like a Kenny Perry, who's now the senior tour. When he was on the PGA Tour, that guy would shoot 63, 65, and that's how he was. Or he'd shoot 72, 77. So the volatility of his scoring was all over the place, much like options pricing is all over the place, much like Bitcoin intraday is all over the place. So for the DraftKings lineup, I put together a little volatility scale, and it identified Brooks Koepka, who is 20th of this 30-man field. He's -2. Now, for him to overcome 8 shots, not likely. But can he finish in the top 5? That's where I'm coming from. He is the most volatile golfer coming into this event for the season. So that means, he had the injury that made his scores not so good. And when he plays well, he was in contention there at the PGA when Phil Mickelson won. He plays very, very well. Rory McIlroy owns this course. Even though it's the home of Bobby Jones, they're in East Lake, Atlanta. Rory McIlroy just owns this course, and he's -2. So again, 8 shots, not likely, but to finish a top 5, I think a top 5 bet would be great for him. Louis Oosthuizen, he's -3. He costs 7,600 on DraftKings, which is right in the middle of this range between 5,000 for a golfer, and I believe Cantley is 13,500. And you have $50,000, of course, to spend over 6 players. He too is a guy that is capable of getting into that top 5. So I'm focusing on the top 5 bets using these option volatility mathematics, which is used for option pricing. Now I'm using it for sports betting. And John Rahm is consistent, even though he didn't win last week and had lost in a playoff the week before. He's the guy that I think is going to hoist the trophy and the $20 million check and be Player of the Year for the PGA Tour. And he's in 4th place at -6. He has to make up 4 shots, which he can make up in a round. And he only has to jump over 2 guys, DeChambeau and Finau, who's been playing unbelievably well. And DeChambeau is a guy that I think is not going to like this course, and it won't suit his style of play. Like last week was a bomber's course. This is not quite like that. But anyway, I just wanted to single that out. The most volatile golfers on the board are Bryson. Then we have Jordan Spieth, had been playing awful, but now last couple of months he's been more better, as they say in some places. Sam Burns is by far the most volatile. And then you have Colin Morikawa, who is a major champion and won the British Open, or the Open as they call it. He's another guy that's very volatile. So those are some of the names that you want to identify for your DraftKings, because if these guys get hot, you're gonna be cashing that DraftKings ticket for sure. So that's about it for that.
I like it. I think I like the analogy, and it goes back to what we're talking about. You kind of scale in, and you based on the implied volatility, right? I mean, when something in the financial markets is going to move more than average, you don't have to bet as much on it, and that's what we talked about Bitcoin. Bitcoin, I think in the future is not going to move as much as Ethereum and these other younger cryptos. It'll be more stable, but that also means we're not going to see the crazy 50-70% corrections anymore, I think, in Bitcoin. And today alone, it
Right.
moved 2.5%. Ethereum moved almost 9%. That's a pretty big difference for something that's been like 70-80% correlated over the last couple of months.
That's exactly right. I lost my headset volume again. I couldn't hear if you were providing any extra intelligence while I was doing that breakdown of the PGA Tour. So I apologize.
No, I'm not a PGA guy, but it made a lot of sense. What you're talking about made a lot of sense, though. I was enjoying it.
Yeah, it's a beta test, and you don't take that. I want to emphasize that's pizza money, as we call it. So whatever your pizza costs where you live, that's about the max bet you make on any of the ideas I had there. But it provides a little bit of more fun to watch, especially if you're not a golfer like I am. Mr. Merril he doesn't play golf, but he lives near one of the most spectacular golf courses there is, so that, I'm very jealous of that. But, I'll have to go visit him sometime and just show up and say, here I am.
I need to get back out there. It's been about 20 years since I've hit golf balls on a consistent basis, but something I do need to start doing more.
Well, that's why you have more hair than me, too. Hey, golf's great. I mean, it's we'll have to see what happens. It'll be very exciting how it pans out here. Like I said, with the history of Tiger, this is not a course that if you're the first time there that you're going to just dominate. and it just will not happen. And that's why I'm kind of negative on Bryson here a little bit. And he's a polarizing individual. Sometimes, like in that 6-hole playoff with Cantley, Cantley is walking a good 30 yards, and there's no way Bryson can see him. Yet he hits a shot, and it's not exactly perfect by Bryson's standards, and he actually blames Cantley for walking on his blind side. Like, you're right-handed. It wasn't like he was walking where if you lifted your head up like this, Cantley would have been walking. He was behind him and 90 degrees to him. It wasn't even like he was ahead of him. And those are the things that, if he would stop doing that, I think he'd be probably a lot more popular.
Yeah. It rubs people the wrong way. No question.
Yeah, it does. It does. But you'll have to watch that 6-hole match on the abbreviated version, is the playoff. That was by far some of the best golf in the history of the game. Tom Watson and Jack Nicklaus in the Battle of the Sun in the Open Championship, where they both shot 65s, and no one else even was close to that on the last day. And Watson won by one. Not many people know that Jack Nicklaus came in second in 18 other majors.
Yeah, that's what's incredible. But I will say, I think the depth of those competitors was obviously nowhere near what it is now, and that's the same thing we saw with we see that with NASCAR as well. And NASCAR betting is very similar to golf betting. Of course, I follow NASCAR closely, and it's the same thing. Like when Richard Petty was winning, the most races ever in the early '60s and '70s, or there were guys back then, back 50 years ago, they were winning those races by like 8 or 10 laps over the second place car. Most of these races now are decided by like 1 second over the second place car. These guys were taking 50-second pit stops, which is amazing to me that they didn't make the analogy back then that a faster pit stop would mean you race faster. But so, you obviously have to compare them within eras, and they were just a man among boys. And Nicklaus and then Palmer basically won every other major during that time. There just weren't as many guys that could compete with them. So now you've got 50 20 guys that can win a given tournament at least.
50.
So
you're right.
Yeah, that stat is a little different for that reason, but it is amazing still how dominant he was. But it's once again, it's like Jim Brown. Jim Brown was a man among boys. Babe Ruth was a man among boys. I mean, you still have to compare within their era, and there weren't as many great golfers, which actually makes them even greater. The fact they were that much more dominant. So I think you have to look at how guys dominate within their era, and you can make an argument that Nicklaus and Palmer somewhat as well were probably more dominant than Tiger, because yes, Tiger's got more competition, but he's not crushing guys by 10 strokes, or just leaving them in the dust. So it's pretty amazing how far ahead of the time those guys could compete in their prime. Those guys could still compete nowadays, and you can't say that about too many athletes 50 years ago in any sport that could still compete with the modern athletes. So that's pretty remarkable.
Yeah, you're absolutely right. It is. So I guess we'll call it a day here. We're still short the 10-year note, which is doing well for us. I have nothing in the S&P. I'm just looking for that short to hedge up everything that is long, so that when the market goes down, doesn't matter how far it's going to go down, the value of the IRAs are going to stay the same,
right,
or as close to the same as possible. So maybe the next show, if we do one tomorrow or Friday, we should talk about how to hedge and using a Tony Finn term called delta and delta weighting. Maybe another one to give them.
I will say this, the VIX index, the volatility index, is basically at an all-time low, which isn't a surprise because the S&P is at an all-time high, and it's basically an inverse. But the one thing about the VIX is that it moves substantially faster. When the S&P had that 3-day drop a few Mondays ago, like 3 weeks ago, the VIX moved like 30%. So you're getting like 10 times the risk leverage a lot of times. And the only reason you'd be long the VIX is for that tail risk, is that, it's an insurance policy. But as with most insurance policies, if you're in the Northeast right now, your flood insurance is one of those. You're betting a little bit every year. You hope to lose those bets theoretically, because if they pay off, that means you've lost a lot somewhere else. So, buying the VIX right now is that's a very simple hedge strategy. You can go along the VIX index at historic lows right now, And, once again, bet just maybe 5 or 10% of your portfolio would cover a huge chunk of that if you had a big intraday swing. And problem is, though, when you're wrong for several months like we've been, about it correcting, is that it does chip away. I personally would rather just have a trailing stop loss at 2 or 3 different levels, have a very tight one to take 20% out, have another fairly tight one to get another 20 or 25% out, and then, if you want to have a teeny bit of VIX as well, that's another way to do it.
Yep, I agree. Yeah, so if you have time, you're welcome to stop by Manny's Irish Pub. You usually stop in on Fridays.
Yeah, maybe this Friday. I was going to say Monday through Thursday I'm out, but this Friday maybe, although I'm doing the NASCAR show and I'm also doing a new college football show, and I think I'm going to be the Friday spot on that on WagerTalk.com. So that's kind of around that 3:30, 4:30, 5 o'clock window. So maybe at the very end I'll squeeze in if we get done in time.
Yeah, even if it's for 5 minutes, it'd be great to have you in.
Sounds good.
A fun show to say the least. We did it in 45 minutes yesterday.
Nice.
I think that was the shortest all time. So we're trying to get it shorter for obvious reasons, because it's so late in the day. It's a summary of basically the whole entire day, and it's really hard then to have the time to actually slice up the videos and make them into digestible little pieces instead of listening to a whole 2-hour show. So that's what we're trying to do, is trying to calm down our gifts to gab.
Yeah, I'd say make sure Tony's on board with that. Run that by his agent.
Yeah, I think he will be. I'll start acting like a real host if I have to, I guess.
Right.
Yeah, and just cut him off, or I'll get that buzzer that I love that buzzer that Joe Ranieri uses, and he's obviously a very polished host and knows how to cut people off properly. And it is what it is.
He's got a tight leash on Finn. He definitely does.
Yep.
Well, that sounds good. I'll try to stop by Friday if we get the other shows done in time. I'll keep in touch with you.
Awesome. Thanks again for your time, and on behalf of Steve Merril, myself, WagerTalk.com, SportsMemo.com, and these Predictive Playbook shows, may all the trades be winners for you.